what happens when your property taxes jump. Let's say you bought a house. You know the payment, you budgeted around it, then you get a letter saying your mortgage went up $200 a month. You didn't miss a payment, you didn't refinance, nothing changed. Except your property taxes went up, and nobody told you that was coming. Here's the thing, this isn't rare, it happens constantly, and it hits people on hourly income harder than almost anyone else because there's no cushion to absorb it. So let me explain how it actually works. When you have a mortgage, your lender collects your property taxes inside your monthly payment and holds them in what's called an escrow account. When the tax bill comes due, they pay it. You don't even see it happen, which is honestly fine until your taxes go up. And they do go up. Your county reassesses what your home is worth, recalculates the tax, and your lender adjusts your escrow payment to cover the difference. Your mortgage payment goes up. Simple as that. Here's what the numbers look like. Let's say your property taxes were $3,600 a year when you bought the house. That's $300 a month sitting in escrow. The county reassesses. Now your taxes are $4,800 a year. That's $400 a month. Your payment just went up $100 a month. And that's before your lender adds a buffer to make sure it doesn't happen again. So realistically, you're looking at $150 to $200 more per month out of nowhere. I'd argue that's manageable if you saw it coming, but the problem is most people don't. There's also a second hit that most people have no idea about. If your escrow account already ran short, meaning your lender paid out more than they collected, they'll add a shortage repayment on top of the new higher payment. So now you've got $200 more a month for the shortage, plus the $150 more for the new tax amount. That's $350 more a month out of the same paycheck with the same bills. Just $350 less to work with. Honestly, the shortage piece is what really gets people because it's not just going forward, you're also paying back what already happened. Now here's why this is becoming a bigger problem than it used to be. Home values went up dramatically between 2020 and 2023. In a lot of markets, they went up 30, 40, and even 50%. Counties assess your taxes based on what your home is worth. So when values jumped, tax assessments followed. Some counties are still catching up right now. If you bought a house in 2020 or 2021 and haven't been reassessed yet, there's a real chance it's coming. And the issue is timing. Your home value went up fast, and your income probably didn't. So the county is essentially taxing you based on a paper gain you haven't actually realized. You didn't sell the house, you didn't cash anything out, your home is worth more on paper, and now you're paying more every single month because of it. I'd argue that's one of the more frustrating parts of owning a home that nobody talks about when they're selling you on the dream of home ownership. Let me walk you through a real scenario so this isn't just abstract. Say a guy makes $72,000 a year. The take home is around $54,000. Call it $4,500 a month. He bought his house 3 years ago. Payment at the time was $1,650 a month, including escrow. That's tight but workable. His property taxes at purchase were $3,200 a year. The county does a reassessment. His home value went from $240,000 to $310,000. His tax rate is 1.4%. So if you do the math, his taxes jump from $3,200 a year to $4,340 a year. That's $1,140 more per year, $95 more a month just on the tax increase. But his escrow account ran short by, say, $800 because the taxes already went up mid-year before the adjustment kicked in. So his lender spreads that $800 shortage over 12 months, another $67 a month. His mortgage payment just went from $1,650 to $1,812 per month. That's $162 more every month on a $4,500 take home. He went from having $2,850 left after the mortgage to $2,688. It's not the end of the world, but he wasn't expecting it. He didn't plan for it, and now every other line in his budget has to absorb it. That's the scenario. That's what the letter in the mail actually means in real numbers. So what do you do about it? First, find out when your county reassesses. Every county is different. Some do it every year, some every 3 to 5 years. Google your county name and property tax assessment, and you'll find it in about 30 seconds. If you're due for one, start building toward it now instead of reacting to a letter. Second, read your escrow analysis when it comes out. Your lender sends one every year. Most people throw it straight in the trash. Here's the thing though, that statement tells you exactly what's in the account, what's going out, and whether you're running short. If you catch a shortage building early, you can pay it down voluntarily before they force the payment increase on you. Third, this is exactly what the gap fund is for. 1 month of fixed expenses in a separate account. A $200 payment increase with 30 days notice isn't a crisis if you've got something sitting there. It's only a crisis when you're already running on empty. One more thing, you can actually fight a tax assessment if you think it's wrong. I'd argue most people don't even know that this is an option. If your county assessed your home higher than what comparable houses in your neighborhood are actually selling for, you can appeal it. The process varies by state, but it's usually not complicated. You file a form, show comparable sales data, make your case. Some people get it knocked down. It takes maybe 2 hours of your time. It's worth knowing about. So here's the bottom line. Property taxes going up isn't something you can stop, but getting blindsided by them is completely avoidable. Know when it's coming, watch your escrow, keep that buffer in place, and if the number looks wrong, challenge it. Honestly, most people just accept the letter and figure out how to absorb it. The ones who actually look into it are the ones who end up in a better spot. That's it for this video, so subscribe if this is useful information for you. I've got real situations, real numbers with no fluff, and I'll see you in the next one.